Have you ever thought about buying a house through a private lender? Well, let me tell you some of the pitfalls and some of the things to look out for so that you don't get caught in the same place that one of my buyers is caught in. So I'm Casey Jenkins with Oak Realty, and looking at private lenders could be a great option if you can't go the normal lending route, as long as you know what you're getting into. I have a seller client right now who I am helping get their house sold, and he went with a private lender. And looking at it from my standpoint, where I know what's going on in the normal lending market, there's a lot of things that he just isn't afforded that the normal everyday, person who has a loan through a bank is. So one of the big things is he has a pet fee he has to pay. A normal mortgage doesn't care if you have pets or not. It's totally up to you. That's more of something that is paid when you have a rental. The other thing he has to pay for is if he wants to get his payoff, if he wants to see where he is, if he wants his documentation that he signed at the very beginning of his mortgage docs, like all the documents that surround this, he has to pay for them every time he asks for them. I can log on to my mortgage, click a few buttons, and have it sitting in front of me perfectly for free. And so that's a big thing. If they're charging you for every single little thing that you ask for, or every time that you reach out, that is a red flag for you not to go down that road, because a normal mortgage does not charge you any of those things. And it might be worth you fixing the credit or whatever needs to be fixed to be able to get that normal mortgage and save yourself some money. The other piece is he put down a non-refundable deposit. You don't do that in a normal mortgage. All the money that you put down goes towards your closing costs, it goes towards your mortgage, it goes towards whatever it is sitting down, but there is no non-refundable deposit in a normal mortgage that somebody just keeps and makes money off of. Another thing to note is that when he sells the house, he owes his private lender 10% on top of whatever the amount that he owes them. So if he owes him $100,000 left because that's what's on his mortgage, now he owes him $110,000. That is not done in a normal mortgage. You just owe what you owe, flat, period, the end. You may pay $1,000 for the 2 fees for them to record and things like that, but there is no 10% on top of this mortgage. It's just, this is what you owe. And so that's a huge red flag. And then the other big piece is he can be kicked out of the house within 5 days of non-payment. So his is set up to pay weekly, where normal mortgage you pay once a month. And if he does not pay, then in 5 days, in his documents, it says that his lender can kick him out of the house. In a normal mortgage, that's going to take months. If you don't pay and you're getting foreclosed on, it's going to take months to go through that foreclosure process. You have a lot of times to talk with a normal mortgage to be able to go, hey, I want to refinance this, or I want to rework this to make this happen so I can continue to keep it. And they, for the most part, are going to work with you to make sure you keep the house. They are not going to say you got 5 days to get out and then it's mine again. So these are some of the red flags to look for when reading all your documents. And private lenders tend to go towards people who are just very desperate to get into a house versus somebody who is going to have the ability to get into a house normally. If you are that desperate to get in a house, call me. Let me set you up with some type of lender to be able to go through, get yourself a whole entire credit plan to see what we need to do to get you into a house so that you're not taken advantage of and charged out the wazoo for everything, and that you're not charged for every little question that you ask and every little thing that you do, and you're not being told you're going to lose your house if you can't pay. That is just very unnerving to you as the owner. It's very unnerving to you as a person that's trying to plan for things. That is not what you need in your life. The other, and one of the last things I've seen, is he doesn't actually own the house. The private lender is the one on the deed. And when he sells the house, basically the private lender will sign it over to my client, and then my client will sign it over to the new owner. So my client will have owned the house for a day, which then takes him out of all first-time homebuyer benefits. Everything that he owns or everything that he looks at, he cannot get that 100% financing. He cannot get, that 3% down. He can't get any of that because he is now on the deed of the house. But the biggest problem is he's not on the deed of the house while he's paying a mortgage. So really the way he is set up, in a way, at least this private lender is set up, it looks like he is renting the house from the private lender, and the private lender is making him pay a lot of money over and over and over again for things that a normal mortgage would not make you pay for. There are ways to get into a normal mortgage where you've set yourself up and you've worked on your credit and you've done everything to be able to pay normally and have all the protections that you normally have of not getting the house taken away, of not having to pay for every little thing, of not having to pay 10% on top of your payoff. Like, all of these things are things that you should be afforded as a buyer, not somebody who's looking to take advantage of you. Because now that my client's trying to sell the house, this guy has offered him money to just walk away, and this guy can keep the house. And that is a huge difference of what this guy is offering versus what my client can actually get it selling. And a lot of people, when they're in this position, they'll just take what the guy is offering, not knowing that they can probably get 3 to 4 times what the guy is offering to be able to walk with. So if you are in a private mortgage and you are thinking about selling, give me a call. I'd love to go through the numbers and say, hey, if you're thinking about selling, this is what you're going to make on the open market versus what you're getting offered from him. And if you're thinking about doing a private mortgage, I pray you hear this video so that you ask a lot of questions, you read all your paperwork, you make sure that everything looks good and that you're afforded the normal everyday foreclosure process, that you know, everything's due on the 1st, but you don't have to pay till the 15th. You don't have to pay an extra fee when you sell. You don't have to pay extra fees for this, that, and the other thing. I pray that you hear this so that you know your rights as a person who owns a house, because a lot of times this is first-time home buyers who have no clue what's going on or no clue what to expect out of a normal mortgage. And so they just think this is normal because this sounds a lot like what they've been doing renting-wise. But don't rent your own house. Let me help you get into a house that you actually pay for, you make a lot of money on, and you don't have to pay somebody else for. So if you've got questions about private lenders, at least the one that I've dealt with, give me a call, shoot me a text, love to chat with you. There's probably some great ones out there that take care of you and make sure that you actually own the house, and make sure that you get afforded all of these. You just need to really read those contracts. So don't forget to like and subscribe.